Well, thank you all so much for taking time out of your day to join our webinar titled Accounting and Business Outsourcing, the Whens, Whys, and Benefits for Your Organization. Our goal today is to describe how outsourcing certain accounting, bookkeeping, and business processes can allow you to shift your resources to better focus on managing your organization. Now, many of you in our audience today would like to earn CPE credit. I want to share how you can claim that credit. First, you can earn 1 credit hour of continuing professional education in the accounting field of study for attending today's session. Certificates will be distributed via email within 7 business days following the conclusion of the webinar. Email certificates will be delivered from certificates@simplecert.net, so be sure to check your junk or spam folder if you don't see your certificate when you expect it. If you have questions about the certification process, those can be sent to marketing@cricpa.com. The PDF handout of today's presentation slides will be emailed to all participants within 24 hours following this webinar. But you can also download the PDF from the handout section on the right of your screen if you would like to follow along today. Now, to receive credit for today's webinar, you will have to answer 80% of the polling questions we present throughout today's session. Incorrect answers will not count against you. The polls are pass-pass, not pass-fail, as long as you answer. You will also have to remain logged in and actively viewing for at least 50 minutes during our 1-hour presentation. We can only award credit based on the electronic records of your attendance. I also invite you to type questions into the questions section of our panel on our GoToMeeting panel. And we'll watch those. We've got somebody watching all of those questions as they come up. So please let us know your thoughts, and we'll try to answer those as we go through the presentation. And we may have to reach out after the presentation too for some follow-ups. Well, folks, we have 2 very accomplished CPAs and partners from Carr, and Ingram bringing you our webinar today. I know both of these folks well, and every time I work with them, I come away with new wisdom and guidance. Up first will be Deanna Dibbett. Deanna works out of our Nashville, Tennessee practice unit. She is a graduate of Belmont University, enjoys volunteering, including working with the Second Harvest Food Bank, along with exploring other cultures, cooking, and discovering new restaurants. She and her husband are raising 3 teenage daughters, but luckily she has a boxer named Tyson to keep them all in line. But during her career, Deanna has implemented accounting systems, developed best practices, and trained many clients and staff members to produce relevant, accurate, actionable accounting data. Our next speaker is Greg CRABTREE from our Huntsville, Alabama practice unit. Greg is a graduate of the University of Alabama and has volunteered with the Boys and Girls Clubs of America. He tells me that his 3 grandchildren are lots more fun than his 4 children, and I imagine his wife Debbie agrees if she's like most grandmoms. Greg is also an avid golfer and has an Australian Shepherd named Winston. I wonder if Winston is good at herding grandkids. Maybe he needs to be. Greg is an accomplished public speaker and author of 2 books that explain in understandable language how to use accounting data to manage your business. Both books appropriately incorporate the term simple numbers in the title. Greg is also member chair of the EO at Wharton Executive Education Program. I'm Martin Copeland, and I will be your moderator for today's program. I'm a CPA in CRI's Aniana, Alabama office and lead our firm's Client Accounting Services Group, which is our internal name for business process outsourcing services. In addition to my public accounting experience, I've worked as a controller and internal auditor in public companies. Like Greg, I'm a University of Alabama graduate. I enjoy canoeing and winter sports, which includes one memorable bobsled ride with a U.S. Olympic medalist. But Greg, I stick to hiking since I agree with the statement that golf is a good walk spoiled. Let's talk about today's agenda. I'll run that down for you. We're going to discuss why you should outsource your accounting department. accounting outsourcing and what services could be included, benefits of outsourced accounting, when you should outsource your accounting, leveraging technology, guidelines for a successful transition to outsourcing, and next steps after establishing accounting processes. So first up is Deanna Dibben. And so Deanna, can you start us off by describing some reasons why folks should consider outsourcing accounting department tasks?
Thank you, Martin, for the introduction. So why outsource your accounting department? Let's be honest, accounting is typically not the most exciting topic in the business world. As an entrepreneur or a business owner, most of you would rather talk about products or services your company has to offer and not debits and credits. An accounting department handles the day-to-day transaction coding, accounts payable, accounts receivable, payroll, management financial reporting, and many other services. Outsourced accounting is a service which provides a full accounting department experience for small to medium-sized businesses. As part of running or managing an organization, one of the initial and primary concerns is to try to keep costs as low as possible. And sometimes this means doing everything yourself, including bookkeeping. Although this could work for a short-term period, your focus should be on developing and growing your company. And to do this, you need a trusted advisor that can provide real-time financial insights and strategic guidance. Getting timely and relevant information that can produce better, faster decisions, to make your organizations more profitable and efficient. And to be able to do this, you need to take advantage of advanced technology platforms to gain real-time visibility into the business. Outsourcing will also provide for a cost-efficient way to improve accounting functions. It enables organizations to scale resources up and down as needed with no obligation to pay salaries or benefits. In addition, it reduces the burden of hiring, training, and maintaining accounting staff. Finding the help needed when existing staff leaves your organization or has an emergency family or health crisis is challenging, and it creates undue burden on management and owners. By having accounting function outsourced, you are guaranteed continuity in your operations. And with that, we are ready for our first polling question.
All right, great, and I'll launch that for us. And our question is, what are some of the reasons to outsource your accounting functions? And the answers are, allows management to focus on business growth, eliminate need to hire and maintain staff, provide peace of mind for business continuity, or 4, all of the above. And let me remind you guys that you need to vote on these polling questions so that you can earn your CPA credit for today's session. So I'm gonna let you guys vote. I'm gonna leave the polling question open a bit, but Deanna, it struck me as I was listening to you that business process outsourcing might also help organizations deal with unexpected interruptions like the current COVID pandemic. Have your clients struggled to maintain their books and records during 2020?
In my experience, those clients who had limited access to the office and accounting software definitely struggled and fell behind in keeping financials up to date, as their setup was not ready for remote work.
All right, thank you for that. And I've seen that same thing in my practice with my clients. I want to remind you guys that you do need to vote. We've got about 80% of the folks that have answered our polling questions, and that means about 80% of you guys would get CPE credit. So we got another 20% or so that we'd like to hear from, just to be sure that that we can give you guys credit. So I'm going to leave it open for just a few more seconds. I don't see a lot of, a few more of you voted there in the last few seconds. So you go ahead and lock those in for us so we can close this and move on. right, we're at about 85% right now, and we got a few more votes still coming in. So give us just another moment before I close this. And I know some of you guys maybe don't need CPE. It would be helpful if you go ahead and vote, even if you don't need CPE, so that we know that that we can move on. All right, I am going to go ahead and close these results. You, if you want CPE credit and you haven't yet voted, be sure that you vote on the next few slides so that you get credit. So at about 90% of everybody voted, I'm going to go ahead and close, and I'll share the results. And looks like most everybody agreed that 95%, that is at 95%, that all of the above was the most appropriate answer. Now, Deanna, can you describe the services that would be perfect candidates for outsourcing?
When evaluating accounting needs, you may question what type of services are included. Some of the services are presented on the current slide, and not all of them have to be packaged together when outsourcing. That's the beauty of outsourcing, that businesses can pick and choose which services would fit their needs. Transaction processing, this includes bank and credit card transactions to record deposits and purchases. Typically, these are large volume data that needs to be converted into a meaningful financial statement presentation form. Accounts payable, entering paying bills. Every business has bills to pay. However, the volume and process for paying these will vary significantly depending on the industry and type of business. Payroll processing and recording, including those with outside payroll provider. This may already be one of the functions that is being outsourced by your company. However, the payroll data has to get reported on the financials. Accounts receivable, sales invoicing and receipt of payments, similar to payables function. Some smaller businesses and the nature of business they're in may not require invoicing function, as sales are recorded when payments are received. Software and processing training. Sometimes when only portion of services are outsourced and duties are split with internal company staff, we spend time in training on processes and software as needed. Month-end close, probably the most common jargon that everyone hears in the accounting world. This process includes a number of steps that need to be performed to properly finalize the books for that month. Those include journal entries that are typically posted at the end of the month. Without a good handle on the core accounting functions, an organization will not be able to budget and forecast or produce any meaningful financial analysis, such as identifying most profitable clients or making sure that jobs are priced correctly to make profit. Management meetings typically cover not only historical data, but also cash flow projections and discussions about investing in equipment or hiring more employees. Now, prior to identifying which services are needed, business owners will need to gauge existing resources to identify gaps in current operation, or as I like to refer to those, pain points. These could include not only human involvement, but also software offerings. As part of our initial consultations with clients, we ask a lot of questions about operations as well as how they're being handled from the accounting standpoint. Then we tailor our services to that client based on the information gathered. And Martin, with that, we are ready for another poll question.
Great, and I'll launch that. And our question is, outsourced accounting services might include tax return preparation, transaction processing, both A and B, or neither A nor B. And Deanna, while we're getting our votes in so folks can get their CPE today, you just discussed outsourcing the functions that are really truly basic building blocks of accounting and bookkeeping systems. Do organizations also normally turn over their responsibility for oversight and evaluation of those same services?
I would say No, and that most clients that outsource their accounting functions typically find that they don't have to spend time reviewing details of transactions, and instead they focus on overall financial activity represented on financials.
All right, very good. We're at about 77% of everybody on the call having answered our polling questions. So I'd like for you guys to go ahead and get those answered so we can find out the results and make sure that everybody does get credit today. I get to see a sneak preview, and I see that interesting. There's going to be a little bit of disagreement today on this question. It's kind of fun. We're at about 85% voted, so I'm going to get us up to right about 90%. I know that not everybody has to have CPE, so I'll close it out here in just a few more votes. You guys can get those in for us. All right, so we're right about there. And I appreciate everybody voting, and hopefully you've had time now to answer. So I'm going to close and share those results. And interesting kind of spread there. We got most people, Deanna, that actually chose both A and B. What do you think about that?
That was a trick question, I guess, putting both A and B in there. Now, accounting services would not include tax return preparation. That's a separate engagement.
Right. So, yeah, I think she did absolutely trick us on that. Tax services are a service that we provide, accountants traditionally provide, but we are really speaking on those outsourced accounting services today. So I'm going to go ahead and hide the results, and we'll move forward. And look, I'm a self-professed tech nerd CPA, and I really enjoy our next topic. So Deanna, can you talk to us about leveraging technology in outsourced services?
So automation is definitely disrupting some of these service offerings. However, accountants still play a vital role in analyzing data and making sure it's properly reflected on the financials. So with evolution of technology over the years, traditional bookkeeping and after-the-fact manual data entry is no longer a standard. We have knowledge and understanding of various technology tools and how to combine them with processes and best practices to improve efficiency in accounting functions. One of the main efficiencies in adapting to currently available technologies is the fact that it enables automation for many bookkeeping tasks, thus reducing and in some instances eliminating time in pure data entry. Although it may reduce or eliminate human error in data entries, and oversight and problem-solving skills of qualified and experienced staff is still required. So outsourcing also provides implementing technological conversions and the supporting process needed to increase efficiency. In addition, accounting data is stored on secured servers in the cloud and is protected against physical data loss. This is important from the disaster recovery standpoint as well as business continuity. Remote work, especially in the current global economic market, is a reality, and many organizations were not prepared to easily pivot and continue to operate normally because they did not adapt to technological changes that have advanced drastically over the years. Martin, we're ready for poll question number 3. Martin, I think you may be muted.
Well, thank you very much. And you were right, I was. So I hope everybody was able to read those questions. the benefits of using technology or real-time information, increased efficiencies, data security, or all of the above. And I see everybody's well into their voting. But Deanna, as you talked about leveraging technological changes, I wondered how technology might affect the traditional month-end close process you described when you discussed outsourced accounting services. Can you speak to that?
Sure. Month-end close can be a labor-intensive task, but technology is enabling accounting departments to move towards a what we call a continuous close, where most of the transactions have already been recorded, and month-end process becomes more of a review process and not a fire drill of posting journal entries or recording transactions.
Great. Okay, so now we've got about 87% of the folks have voted. I'm going to give you just a couple of more seconds here so that you can get your CPE credit for today. We do have a lot more agreement on this answer, and so I'm going to go ahead and close. Looks like we're kind of sitting still on our answers, so here it is. And let me share the results of that poll for you. And so, yep. Looks like 95% say all of the above, and I think I would agree with that. Wouldn't you, Deanna?
Yes, everybody's paying attention.
Good. Okay, so I'm going to hide the results, and we're going to move on. And you've touched on a few benefits of outsourcing, but let's bring those benefits into focus, shall we, Deanna?
Sure. So some of the benefits of outsourcing include the cost effectiveness. So hiring an outsourced accounting service is often cheaper and more cost effective than hiring an in-house staff to handle that finance function. By outsourcing, you don't have the overhead cost of hiring an employee. And also the value of having the entire team's expertise rather than just one or couple internal personnel include reducing the risk of non-compliance and unreliable financials, especially for smaller businesses starting out. Real-time information, accounting data is processed as it happens, providing for timely reporting, which helps in financial and trend analysis, budgeting, and forecasting. By having access to real-time information, businesses position themselves for growth or change. Security, as mentioned previously, data is stored on a secure cloud server accessible from anywhere with an internet connection. Fraud prevention. Unfortunately, fraud is most likely to occur in smaller companies as a result of having one person overseeing accounting process, and circumstances in smaller entities to manipulate the books or have a fake expense overlooked for months are ideal. With outsourced accounting services, there will be multiple sets of eyes reviewing transactions and reports, therefore creating increased internal controls. Now, even though fraud can never be ruled out completely, by having a team with accounting expertise and best practices, businesses will be more likely to spot an anomaly. Proactive approach. Most business owners are not trained accountants and prefer to concentrate on running the business and focus on the overall growth and vision of the company. This is why having an outsourced team to oversee not only transaction processing, but also provide valuable and proactive insights on data for better financial decisions. Capacity challenges. Most organizations struggle with limited resources and increasing demands. Business needs also change over time, and it can be challenging to meet those shifting needs with existing resources. Outsourcing can help fill your needs that may develop over time as your organization grows. And outsourcing some or all of your accounting functions from CFO down to bookkeeper can give you access to a wider range of skill set, knowledge, and team of experts. Martin, we're ready for the next poll question.
All right, and I'll launch that, and here it comes. And so our next polling question says, the benefits of outsourced accounting include cost effectiveness, after the fact information, taking a proactive approach, A and C only. And while we get our answers in, so everybody gets their CPE, their CPA, CPE. Deanna, you mentioned fraud reduction as a benefit of outsourcing. And from my work as an auditor, I agree that segregating tasks, especially tasks associated with cash receipts and disbursements, is one of the greatest deterrents to internal fraud. But if organizations outsource those functions, do they also give up stewardship over their cash?
Not at all. So clients maintain the responsibility over approving payments before funds are released, and they're depositing cash receipts themselves. Or as an alternative, some organizations provide an option to receive payments electronically, in which case funds are automatically transferred directly into their bank account.
All right, very good. And we're at about 82% voting so far. And we've got some fairly consistent answers coming in here this time, which is a good thing. I want to give you guys just a few more minutes, a few more seconds actually, so that you can lock your vote in, so that we're sure we can give you your CPE credit for joining us today. And looks like we're just barely moving our voting percentage, so I'm going to close that down. If you want to get credit, go ahead and make your vote final. And all right, so here we go. I'm going to close that and share that with everybody. And there it comes. A and C only is our winner. And gosh, I would agree with that. I know that accounting firms have offered that after the fact service for a long time, but it just the resulting data from gathering after the fact information, it is just not beneficial. We're looking for a benefit from outsourcing, and that data, after the fact data, is often stale and not actionable. So, all right, I'm going to hide that and move on. And you know, Deanna, they say timing is everything. But then they also say there's never a perfect time for anything. Let's just ignore them. Deanna, give us your take on when an organization should outsource their accounting.
Well, there are many different reasons for outsourcing accounting, and those reasons will vary for each business. Startup businesses where an owner may have done it on their own, and as the business grows, owner's time becomes more valuable doing other things. It could be reaching certain level of revenues, for example, a $1 million mark, or employing 8 to 10 people. Introduction of new investors that may require better and timely reporting. And by having access to reliable and timely reporting, management is also able to make data-driven decisions. If business is consistently behind on transaction processing, this could be another sign that it's time to outsource. Or if current reports do not provide information needed to position organization for growth and increased operational efficiencies. On the next slide, I'll go over the decision qualifications for augmenting internal roles. So another challenge that many businesses face is how to staff their accounting needs and the range of skills needed. So in general, a $5 million business needs a CFO a couple of hours per quarter, controller a couple of days per month, an accounting manager 1 day a week, and a bookkeeper 1 day a week. So how do you hire internally, since most of these or none of these functions are full-time? And what ends up happening, you will either overhire and have expensive staff work below their value, or you underhire and not get the numbers or financial data you need. And with that, we are ready for another polling question.
All right, let me launch that for us. And here it comes. And the question is, when should you consider outsourcing accounting functions? When you're experiencing growth and expansion, with new outside investors, with limited internal personnel, or all of the above? Let's get your votes in so that we can give you your CPE credits. But Deanna, much of your discussion in this section revolved around outsourcing as an answer to several accounting challenges. Now, a couple of folks took exception to our trick question a little earlier, but I think I know where they were coming from, because organizations also have challenges associated with tax and other client compliance reporting responsibilities. So can outsourcing accounting tasks help address those challenges as well?
Absolutely. Outsourcing produces more timely and reliable accounting data or financial statements, which would greatly improve our ability to complete tax return, or in some instances, it helps clients with other compliance reporting.
All right, thank you for that. And guys, we're at about 82% of everyone that's voted. We got up to almost 90% on our last question. So let me give you just a couple of more seconds to answer those poll questions so that you can claim your CPE credit for today. And so with that, we're getting pretty close. I'm going to go ahead and close, and I will share the results. And this one was not a trick question. Most everybody came up with all of the above. All right, let me hide that. We'll move on. Now, Deanna, I shared with everyone earlier that you were experienced in developing and implementing new processes. How would you describe a successful transition to outsourcing?
So if you're considering outsourcing your finance and accounting function, choosing the right strategic partner is crucial. Whether you're looking for a comprehensive solution, adding to your existing capacity, or just need some extra help now and then, our team approach provides the flexibility, scalability, and backup that you can't get from your existing resources. So my recommendations include scheduling initial consultation to develop an implementation plan and timeline, followed by meeting or introduction to the dedicated team and manager that will be servicing the needs, and having regular and timely communication throughout that transition process.
And let's talk real quickly about the next steps after implementing those processes, Deanna.
So the next steps, so after establishing accounting processes and having access to timely and reliable data, businesses can now produce key performance indicators and position themselves for strategic planning and growth. So key performance indicators, or KPIs, include ratios and measures that indicate recent performance of your organization. Accurate and timely data is necessary to generate these ratios. Key performance indicators can also be key predictive indicators that organizations can use to help in planning their future direction. Management consultations are important to help organizations understand the data provided by accounting systems. Once again, timely and accurate data is crucial. Strategic planning is an organization's process of defining its strategy or direction and making decisions on how to allocate its resources to pursue that strategy. Priorities are set at this step, which help identify tools needed to implement the strategy. And the improvements that that organization achieves through outsourcing accounting processes can greatly enhance the strategic planning process. And finally, cash flow planning, both long-term and short-term, is extremely important for all organizations. Assessing future cash flows using real-time, relevant, and reliable data about expected receipts and disbursements can help organizations survive through difficult times. Cash flow planning is even more important in times of disruptions, such as the current pandemic. And at this time, I'd like to hand it over to Martin to continue with our presentation.
All right, so thanks, Deanna, for you explaining outsourced accounting services and giving us some ideas about how and when clients can outsource most effectively. Well, let's hear from Greg CRABTREE to tell us more about outsourcing challenges and give us examples of how clients have benefited from outsourcing.
Thanks, Martin. Appreciate great job, Deanna, for going through the foundational elements of what makes a successful outsourcing engagement. As I looked at this in my career, I'm one of those folks that's saying, how can we help a business run better, run more profitably, be a better return on investment? And as you look back, many of you may have heard of the book The Goal by Eli Goldratt. So it's a classic book that's taught in MBA programs at Harvard on bottleneck theory. What are the things that are preventing you from accomplishing what your ultimate goal is? And so, these are really kind of the primary challenges that we kept finding. As books are not closed within 5 to 10 days. Now, throughout the year, it's not as hard of a close, but it is very common that as we work with clients in our consulting practice, trying to work with their accounting data, it's, third week of the month, fourth week of the month, next month, before, and you're having calls, 2 months after the end of a month trying to think back. And those are challenges that most people need to be analyzing data as close to the period of when they happened as possible. The numbers are constantly changing. For as much as I really like the aspect that accounting programs like Xero and QuickBooks and most systems now allow for you to change an original entry, you have to have an understanding of when is it appropriate to change an original entry versus when do you make an adjustment of a future entry and not keep going back and changing data. One of the things that we find is once your team that are being held accountable to the data find that the data keeps moving, you're going to lose credibility. And so your data has to be credible. It has to, the term I use in my simple numbers books is your financial data needs to speak truth. And that's a critical element that you're trying to get to. A lot of it is just poor organization. Randomly added charts of accounts that you post things to, things that are infrequently used. There's not good elevation of subtotals. One of my favorite fields of study is behavioral economics. And what you really want to do is find how does the data influence the best of our human behavior is what you're really trying to strive for. And I will tell you that as a practical matter, you've got to start at the summarized level and work your way down. You can't start at the detail level and think that you're going to climb out to the surface. And so a lot of that is data organization to make sure that, are the accounts and the groupings put together in a functional category that allows for quick interpretation at the high level, but also the ability to drill down when you need to do research. Deanna talked about, fraud is in the number one issue that creates fraud in businesses that we've seen across our careers, no separation of duties. It is amazing to me how many of our clients that are large, who have well-developed accounting departments, engage us to do a particular piece of separation of duty that's not easy to carve out within their organization. And plus, by engaging us to do it, it is one of those things that it allows it to be done on a scheduled rhythmic basis. Because when you have an extra duty that gets tagged on to somebody's function, it's I'll get around to that. Oh yeah, that's on my to-do list. One of the things that we work from an outsourced accounting standpoint is we work off of schedules. And so a lot of that is working through a consistent rhythm of activity to make things happen timely and consistently. Another big issue is matching of revenues and expenses. There's Cro-Magnon accounting, which is you record things as cash is received and checks are written. And then the next level of evolution in accounting is, I send an invoice to a customer and then I book cash against it as I receive it. The next evolution is connecting the cost to that invoice as the next level. I just had a conversation this morning with a $12 million software development company that still struggles with true matching of cost and expenses. And yet, they've been successful, but they've been so widely profitable that they haven't had an outside force that's kind of pushing them to do it. But they realize now that there is a process, and it's probably something that will end up helping them. We actually already discussed ways of how do you do that in that process. So you don't have to be $1 million to have that problem. You can be 12 to 20 million and still have that problem. The other issue in data is only looking back. I mean, I'm a huge fan of forecasting, and I learned this from the book Great Game of Business by Jack Stack. Company Springfield Remanufacturing is a diesel engine remanufacturing business. I mean, these guys are incredible. They have taught the concept of open book management to their team, and they've got machine operators that can explain balance sheets, P&Ls, and cash flows better than any CPA I've ever met. And a lot of it is because they don't come at it from an academic standpoint, they come at it from a practical, functional standpoint. Now, one of the things that they do in their business is they reforecast the future weekly. So they do hard weekly forecasts to get to the end of the month every week. They do hard monthly forecasts for the next 2 to 3 months, and then they use trend forecasting, after that. And the clients that we've been able to get into that kind of a mindset, but there again, the forecasting doesn't help you if you don't have good, consistent data to get sight lines of trends and processes that come off of that. Now, here's the other thing that's huge. Once you have this data and you go to your bank and you need to renew your line of credit, you need to get a loan for a new building or a piece of equipment, when the bank sees this consistency of information, they're going to say, oh man, where have you been all my life? It makes the process of lending to where, if you're bankable, it's going to make that banking process so much easier, because now you're not going to get pounded from questions from the credit analyst of dragging the information out of you because you don't have it. You don't have it organized in an easy way. But once you can put these things in our cash flow models and other business analytic tools, it makes that kind of process so much easier, and it's more of the signing the paperwork and making it happen. And as Martin said earlier, we talked about the old aspect of after the fact bookkeeping. 30, 40 years ago, some of you on the call may remember the old write-up systems or pegboard systems, and you would essentially write checks throughout the month and post deposits and then send all that data to your accountant, and then you get this financial statement back. But it is what I refer to as bad data that is late, because it didn't have insight. It was very simplistic in transaction orientation. It wasn't an interactive accounting system. You were just getting handed data. You didn't have something to work with. And in the world that we live in today, we've got to be able to drill down quickly, understand what's in. If you have a question, what's in a number, you've got to be able to know that, but you've got to have an ability to be able to forecast that number and say, what is that going to do and how's it going to go forward? So let's talk about some financial goals to achieve. One of the things that I am absolutely 100% on is that your books are live, and my definition of live books is really this idea of you're probably going to post cash balances, cash activity from that. What does the bank know that you don't know? Your financial records, whether QuickBooks, Xero, whatever accounting system you have, that's going to be your true what is the cash balance that's in there. And Martin, if you scroll to the next slide, please. And so with live, what that means is you're probably going to do minimal checking cash online activity. It should take 15 minutes, every day to just, what does the bank know that I don't know, and what do I know that the bank doesn't know, and make sure that information's in there. And then everything else is pretty much on a weekly rhythm. So I call it the weekly accounting method. And if you're only preparing invoices once a month, my question to you is, why are you doing that? We have a philosophy that says, bill quickly and bill often. And a lot of it is people look at that and say, oh, that's easier. I will tell you that in my research in privately held businesses for the last 20 years, that has been the subject of my 2 books, if you can make margin flow faster in your business, those are the businesses that come out on top. And so to make margin flow faster, it means I need to bill faster and I need to get paid faster. And if I don't have the underlying accounting data to be able to push that piece, that's what's important. And so realistically on the weekly basis, it's mostly revenues, cost of goods sold, and labor that you're really doing hard weekly calculations and postings on. You may pay invoices once a week. I mean, large companies generally only pay bills twice a month, so there's no reason why once a week is perfectly fine for you. What this allows for is this fourth bullet point. This 2-week cash flow forecast has been golden. You know, we've got a summarized sheet that we teach our clients how to do, or we do it for some of them as well. And what we found is a 2-week cash flow forecast is probably about as far as you need to look forward, because it always is going to encompass one payroll period in most businesses. Now, people have tried, you know, there's some people that will expand it out to 4 weeks, or some people will do it multiple months. You know, I kind of look at cash flow on a bigger picture basis past at least the next 2 to 4 weeks. If you've got a business that's in distress, certainly a 4-week model is something that you may have to consider. But if you're well capitalized, if you're running on a good rhythm, 2 weeks is really all you're going to need in that process. And you're not forecasting at a detail level, you're forecasting using bigger picture numbers of general, what is collections going to be, what are my major bills, what are, you know, some note payments or things that might be going through. Once you do these things, then your books, when you get to the end of the month, there's a handful of month-end closing, just final validation techniques that things can be done, you know, by, you know, a controller or an accounting manager level person. And then you can produce the agreed upon financial reports that matter to your business. And those, there's some cores that we believe in that matter to everybody, but those are going to be slightly different for each business in terms of how your business runs. Are you an inventory and accounts receivable centric business? Do you have accounts payables that you have to manage? Do you have monthly labor productivity that you've got to manage? And those become the keys that you got to isolate and look at for each particular business. And then once a quarter, you're going to get even more detailed. You're going to take the business, I call it, you know, the profit cube. You're going to take a profitability look at the business and break it down in its segments. And so, you know, I might have it by line of business, by location, by customer, by employee, by team, by SKU if you're a product business. And so if you organize the data correctly, and we are living in a wonderful age of information technology. I'm 100% in agreement with Martin that you know, the tools that we have available to ourselves right now are incredible, but you have to have planning and structure to utilize them to get the data back out on an as needed basis. And so one of the things that I'll kind of go through with you is we've got 3 case studies of clients that we've kind of done similar these agreements for. So one of our clients is a full outsourcing engagement. It was a graphic design shop that did marketing, branding, and those things. And really kind of the issues that when they came to us, they had a higher level team member that, you know, kind of a manager level person in their business who had financial understanding, but they weren't a trained accountant. And so they were actually doing the books. And as this company continued to grow and scale, it just kept them from truly doing, one, what they love to do, which is do marketing services for their clients. And they got bogged down into doing bookkeeping. And so they really didn't have any controls in place. A lot of these small businesses, you're going to find your one person to hand it over to, and you're going to abdicate as the owner of letting that person handle it. Well, Deanna rightly identified the fact that that is a disaster waiting to happen, no matter how much you trust that person. We had a client one time that it was the wife of the business who worked in the business with the business owner as well, and her best friend was their bookkeeper. After a month of us doing some consulting services for them, we realized that the wife's best friend had been paying her mortgage out of the business for 2 years and had stolen $40,000 right underneath their nose. And so once again, you've got to be able to be careful with these things. You know, the other thing is with an untrained accountant, there was no linkage and connection of the information. And so there's no consistency. So what did we do? Well, we provided them with a trained bookkeeper. Now, because we're a company with multiple people that can do that job, we're not immune. So here's the one thing you got to understand with outsourcing. we're going to assign you a skill level of a person. We're not immune to that person not being with us forever. They're not going to be your person forever, but there's another person that has that same skill set, and it's on us to transition if we ever have to change out those roles. And because if that person is your person and that person leaves, most of the time where we end up getting engaged on an emergency basis on outsourcing is we're the backup bookkeeper of last resort. And so many of our outsourcing engagements came from the fact that their person who had all the knowledge of their financial system walked out the door, and they didn't have anybody, and they had no clue as to how to hire somebody to replace them. And so this is really that pain that we can help you avoid in that process. We put them on a weekly accounting rhythm. So now they had production reports every week. They had the financial data that they need of production reporting. And then we also, once we're touching that data on a weekly basis, the natural evolution is for us to work on processes. And so you say, where's the data coming from? How could it be improved? Now, here's the thing about process. With accounting or operational software like it is, most accounting is now done by a non-accountant at the point of transaction. So think of it like this. If you go to McDonald's and the kid behind the counter presses the picture of a Happy Meal, guess what? He's just done accounting. It figured out how much to charge for the Happy Meal, how much was cost of goods, how much labor was involved, and how much change to give you back if you happen to be the 1 out of 100 people who actually use cash. And so that is a system that has been thought through once and delivered. And so then, that's really where you're utilizing systems and processes, but that's where our team can kind of come in on you don't need that every day. You just need to have somebody to think through it once and periodically review it and update it with you in that process. Next example is a retail client. And this is an example of one of those things that, tons of great point of sale systems, but so many of our point of sale user clients are underutilizing the capability of that system. And so the client had been handling, actually it was the business owner who was taking the data and allow it to connect to their QuickBooks. But there were accounts that were accumulating in both inventory and accounts payable were both wrong. So here, I'm going to give you guys an accounting lesson. It's pretty simple. If you want correct books, all the dead bodies in your data are on the balance sheet. And it's that sheet that you guys never look at. Well, it's an important sheet because it is the physics of accounting. If I get the balance sheet correct at the beginning of the period and the balance sheet correct at the end of the period, net income has to be right. That's it. That's accounting in a nutshell. And so in her case, we had to clean up the errors, figure out what was causing the handoff errors. But then what she ended up doing is engaging us that our person, this is a once a month thing, our person just comes in, and as soon as that month ends, we just check to make sure that did all the handoffs occur correctly. Because anytime that you have a hiccup in processing or a correction of a transaction or those things, many of the systems are not going to hand off that data correctly. And that's the purpose of a month-end validation of that outcome. The last one is high-end client. They have a controller in place. It's a company that does cabinet installations, but in their case, the owner is very much attuned to Six Sigma lean processing things. And so what our job is to really come in once we understood his goals, his objectives, and really help his controller and her accounting team to look through the processes and be that outside eye. Because here's the thing, in a lot of these structural, programs to help people improve their processes, it becomes that aspect that having an outside eye and an inside eye working together creates the best outcome. And so what we were able to do is streamline some of the processes and be somewhat of a buffer between the controller and the business owner in making sure that everybody's being realistic in terms of how they're looking at this. Sometimes it's about managing the people aspect of it. And then our outsourcing team lead did weekly calls with their accounting team for about 2 months just to make sure that those processes got ingrained and we could respond to unforeseen issues that might pop up that the initial analysis might not have seen in that first look. But these are great examples of companies that have been able to have significant financial performance even throughout COVID, and yet, you know, also have the data to truly understand the financial position that they're in. All right, Martin, the poll question.
You ready for a polling question? All right, guys, this is our final polling question, so you guys can pick up your CPE for the day. So here it is. How long does it take, on average, to close your books and produce monthly financial statements? Well, of course, this question is really intended to make you think about the timeliness and usefulness of your current processes. And I'll share the results in just a minute. So you guys go ahead and get your votes in. Greg, I always love hearing your examples. You've got some tremendous experience working directly with clients, and you know, some tremendous situations where you've really helped clients move forward and grow in their business, and that's amazing.
Well, it's been amazing to see that, you know, there's actually a lot of the same problems that $15 and $20 million businesses have that the $1 million businesses have as well. And so you know, I've always looked at it as it's not about size. It is about the impact that you can make with a better data system. And I'm like you, I don't think I've ever seen a client yet that couldn't improve their business with better data. And you've got to be smart and say, is it the system? Many people are trying to change accounting systems, and the system is fine. It's more so you're just not interacting with it in the most efficient way.
Absolutely true. See that over and over and over. We got about 84% of the folks that have voted. So if you guys want to claim your CPE, I'm going to give you just a few more seconds to answer those questions. And then I've got a little bit of wrap up that I'm going to do here. You know, I really do thank all of you for joining us today. And we look forward to working together with you as you focus on managing your organization. So I'll close that poll and let me share those results. And, you know, I think you can see, you know, somebody is in the same boat as you are out there. I am encouraged to see, Greg, that we had about 42% of the folks that say they close in 5 days or less. And
that's outstanding.
Tremendous, tremendous. All right. So let me do my little bit of wrap up here. First off, I want to share some information about upcoming webinars that are pertinent to this audience today. On October 6th at 10 a.m., CRI will present a cybersecurity social engineering focused webinar titled Gone Fishing, and that'll help you learn how to protect your electronic data. That'll be eligible for 1 hour of CPE. On October 22nd at 10 a.m., our TPA, or Third Party Plan Administration Services Group, will present a Business 401k plan webinar. And you all know that hiring and retaining employees is challenging, and providing retirement benefits is one way to overcome that challenge. Now, the Beatles once penned these lyrics. You'll have to imagine a British accent. Let me tell you how it will be. There's 1 for you and 19 for me, because I'm the tax man. Well, and even though there were many temporary tax relief measures introduced in 2020, the tax man is still coming. And we have 2 year-end tax planning webinars scheduled. Both are on November 10th. At 10 a.m., our tax team will focus on individual tax planning, and at 3 p.m., they will discuss business tax planning, and both of those offer CPE credits. Now, on December 10th, I would especially like to invite you to join our second Accounting and Business Outsource webinar that will be titled How to Be a Results-Focused, Data-Driven Organization. And we're going to address how to achieve the financial goals that Greg discussed with us today. Registration information is coming on that one. Now, CRI also offers podcasts on a variety of accounting industry-focused topics, but episodes 16 and 19 specifically may be of interest to this audience as they deal with fraud and accounting outsourcing solutions. Now, you can listen on Spotify, Apple Podcasts, Google Podcasts, iHeartRadio, and our CRI website. And as always, we invite you to connect with us on social media, where you can learn about all of our upcoming webinars, keep up with the latest industry news, and learn more about CRI. again, thank you for coming, and be sure to reach out to today's presenters, and there they are, or team members in any of our CRI offices for additional information about all of our services. Again, thank you guys so much for joining us today. It's been a pleasure hearing from Greg and Deanna and watching your guys' answers to our polling questions and your other questions. If we didn't get to one of your questions during today's session, we'll try to reach back out to you personally and see if we can help you with those answers. Thank you again.